Hello, how are you doing? Welcome along to FTUK's Non-Farm Payroll live stream. It's Friday, the 1st of August 2025. And if you're just waking up in the United States, then welcome to a sea of red across the board. Europe has not taken very kindly this morning to the announcement that the US President Donald Trump has decided to put baseline tariffs across the board of 10%, stretching all the way up to 41%. That is across the board, across everything. And the markets do not like it. It's like everyone is joining the hawkish bus from this point onwards. So that is stocks down, dollar up. And it's nice to see that narrative is back in play. Hopefully it makes our jobs easier, but there's no question there's going to be some tired traders this week because it's been a ragged week with the FOMC. Two voters decided they didn't want to cut rates. Jerome Powell staying firm. I agree with him, but we'll get into the details on that later. But yeah, goodness me, what a sea of red across the board. Stock market is the one to watch today. Please do, as always, join our Discord community. That is the best place to find out all the information from Reza, who will help you out with everything that's happening at FTUK. Futures is just around the corner as well. Also, please do join our YouTube channel. It's growing in numbers every single day. That really helps us out if you hit that subscribe button and join in, put some comments on the videos, whether you like them or whether you don't like them. Everything helps. It's good to see. But Non-Farm Payrolls, if you can stomach it for today, this is what we've got coming up on the menu. We're looking for 110,000 jobs out of the United States for the month of July. That is a low print. I think quite a little bit. We're going to be a little bit higher than that, but I'll tell you the reasons why in a little bit. But we're looking for 110,000. The previous reading was 147,000. That unemployment rate as well, that's expected to tick up a little bit. 4.2%, a tenth of 1% from 4.1%. But this is the interesting one for me today. If we are moving into a more inflationary environment, which the market will want to price in, if we're going to have confirmed tariffs like that across the board, then it would make sense that you'd have all of the metrics that lead to inflation would start to play suit. So something like average hourly earnings, the year-on rate and the month-on-month reading, both of those are expected to tick up a little bit. I'd want to see some firmness in that. That's going to tell you a lot. Now, Powell obviously on Wednesday thought or wanted to stay on the hawkish side. That is the sort of granular detail that's going to help you understand if you're on the right side of the market. But yeah, no question, it's going to be an interesting one. So you've got baseline tariffs now of 10%. It's going to be 10% in Brazil, 30% in South Africa, 20% for Taiwan, 25% for India. All of Europe is seeing red this morning. It's going to be an interesting one, an interesting session. Now, obviously, you still have time as well. I just need to make sure that everyone is fully aware that you can win yourself an account. So no matter how volatile it is, that spells opportunity for traders. We have 3 fantastic two-step accounts to give away on the back of today's Non-Farm Payrolls. We've got a 100k two-step account. We've never given a 100k two-step account away. We've got a $50,000 account, and we've also got a $25,000 account to give us away as well. All you need to do is guess the number and follow the instructions. Now, if you've not entered, I know that there's several hundred people entered already, but if you haven't, you've still got time because we've got 11 minutes before the numbers are going to hit the wires. So all you basically need to do is, if you head into the description section of the YouTube video, the live stream that we're doing now, let me see if I can get this up on the screen for everybody to see as well. All you need to do is go to the YouTube screen and then hit the link in there, the little Google link, and that'll take you to this form here. You can see it here in front of you. And it's got all the details in there. All you need to do is fill in your email or all that sort of stuff, and then give us your guess what you think that the number is going to be. Don't stick it into the YouTube chat, although it's nice to see lots of people on there. That's not good enough. You need to put it into this database thing here, whatever that's called, because that's where the number will be drawn from. So whatever number that you think that's going to be for Non-Farm Payrolls, stick the number in there. You're going to need to follow us on Twitter and YouTube and stuff. Fill out the instructions. They are pretty simple to do. And then, you've got 10 minutes to do it, 10.5 minutes to actually get your vote in, and you could win a two-step account, which is super, super cool. So we've got a 100k Imagine that, 100k two-step account for free. That's outstanding. Or a 50k or even a 25. So obviously the person who is closest, they're going to get the 100k, and then so on and so forth. Right, so the two-step account as well is probably our most popular account. These are the sorts of parameters. Each account that we have at FTUK is different, and they're quite, you can tailor them as well, depending on how you want to work as a trader. This is the skinny for what a two-step is. So if you don't win the account today, then do not worry. We'll have an offer on the website and stuff over the course of this weekend, and you can get access to a two-step. It's a minimum of 3 days. There's 2 phases in this. There's a challenge phase, an evaluation phase, and then you move on to the verification phase. We tend to find that our most successful traders come from this breeding ground in the two-step, because they tend to be able to control their risk and their strategies a lot better than a lot of other people. So yeah, you get a 3-day minimum day trading on your evaluation. That's your first thing. And then you get a 3-day minimum on your verification. There's no maximum duration on FTUK accounts though, so you can take as long as you need. And indeed, we do have some traders that take a year, some even longer. Yeah, so there's no time limit on these kinds of things. That is very important to remember. The static drawdown on the evaluation starts at 10%, and then it's like a funnel. It funnels in, because what we're really trying to do is we're trying to see how good you are at managing risk and how good you are at managing the account. That's why they tend to make better traders overall. So a 10% risk on the evaluation, and then 10% on the static drawdown as well, on the verification as well. The important thing to note with a two-step is that it is a static drawdown. Now that is one of the reasons why a lot of people like it. Personally, I don't necessarily think it makes you a better trader. I think it gives you a little bit of more leeway, maybe, or a softer ride on the market, as if you're not quite as precise with your risk and your reward ratios and your stop loss placement. I think a relative drawdown makes better traders as well. But nevertheless, you've got a static drawdown on the two-step. The daily drawdown as well, that is set at 5% on both the evaluation and the verification. You've got a scaling target there as well of 10%, and that then gets narrowed down to 5%. So as you go up into the verification, you don't have to make another 10% to prove yourself. It's relatively logical as well. Weekend hold, you can hold over the weekend. That's absolutely fine. And then we have some cool add-ons, and this is where people tailor their experience and their process for the account that they have. You can change the payout ratio as well. So if you want to get paid faster, you can get paid every week as opposed to every 14 days. If you wanted to include that, you also can add news trading in. So if you are interested in trading things like Non Farm Payrolls or CPI prints or whatever, you can add news trading, so that is accessible to you as a trader. And you can also unlock our top tier up to $6.4 million on a 100k account, level 7. That is worth getting, that's for sure. So whether you win an account or whether you don't win an account, the two-step is the perfect vehicle for you to go into next week. And I think the markets are going to hot up. I think they're going to get more active between now and Christmas. I certainly hope so. But at least it's not boring. At least it's not boring. That's the main thing. Let's move on. Let's talk about non-farm payrolls now, because we've just got 7 minutes until the numbers will be printing. So 110,000. Are we going to get there? I don't know. I mean, the way it's going to work is that if we get a higher number, we're going to have a that would be considered to be hawkish, and then we would have a stocks down, dollar up place. That's going to put pressure on the stock market. That's where Jerome Powell is sitting. I sit in that camp as well. So I would be way over 110 at the moment. That's what we'll be looking for if we get a hawkish print, a high NFP number. If we don't get that, if we get the complete opposite and the market is right, 110, maybe even lower than that, then that is going to probably bottom the stock market out where we currently are. We'll look at the charts in a second, but that's probably going to give us a bottoming effect in the stock market, therefore basically just creating a buying opportunity next week. And you'd be surprised when the markets look like they're going to hell in a handcart, where you can be in a week's time and everything gets back to normal. So there's nothing quite as scary as a fast move to make everybody think that everything's crumbling, and it doesn't. Although having said that, I don't know. There's something that feels quite toppy in the stock markets on this one, because I was quite surprised on Wednesday when the stocks rallied, particularly when Powell came out and was so firm in his approach. So yeah. I don't know. It's interesting. We'll see what happens. But like I said before, those average hourly earnings, keep a note on those numbers. I want to see those tick up. I want that those consensus numbers to be right. And I don't often think about average hourly earnings as part of our non-farm, what's really going to move the market. But what we're looking for is we're looking to feel and understand if there really is enough inflation, because Donald Trump wants interest rates cut. And this is where it's all getting a bit murky. This is a love-hate relationship. They do not really like each other at all. And that's been discussed in detail in lots and lots of forums online. But the problem that I have with this is that Donald Trump himself, he comes across, he talks on the dovish side all the time, cut rates. That's what we need to do. We need to stimulate growth. Cut rates. It needs to come down. Yeah. But then his actions don't tally with that, because he just launches inflationary driven tariffs across the board. So you can see how difficult the job that the central bank governor, Jerome Powell, you can see in that picture there, how difficult that job is for him to do. It's very, very difficult to do. So this is where I'm on the side of Jerome Powell. That whole thing with Paul Volcker in the late 1970s, having huge amounts of inflation to tackle with. That was the imprint that Powell took as a way of conquering the bout of inflation we've had in the last few years since COVID-19. So, I think he's done a very good job of it. So him staying firm with that hawkish tone, I think it's the right play. I really, really do. I think it's the right play. 4 minutes to go. So what we'll do is we'll just look at some of the key details. Now, you've got these tariffs. These tariffs are going to be what we consider to be inflationary. 10% global across the board. It looks like that's definitely going to happen now as well. And the markets are now pricing that in, which is why you're seeing stocks fall down so viciously. Now, why are tariffs so inflationary? Well, it's simple. It's because all it does is it increases the cost of imported goods. And that's essentially all you need to do. We don't need to do an economics lesson, but essentially that's going to mean higher prices for businesses, higher prices for consumers. They get passed on to the workers as well. Then they feed into the system and you get that inflationary spiral. So generally, if you have to pick a side, then you've got to say that tariffs are going to be inflationary. That is not. So this is where it's confusing with Donald Trump. Donald Trump then saying, well, okay, bring interest rates down. I don't think that's the right play at all, you see. And I think the market is now starting to not believe him, which is where that volatility in the stock market has definitely come from. So 3 minutes to go. This is what I think we're going to... Basically, I think it's a relatively simple read, although I think it's priced in. If we get a firm jobs number. So a low number today would be pressure to cut rates. We would consider that to be dovish. That will be stocks up, which would give us a bottoming effect in the stock market right now, and that will be dollar down. So more downward pressure on the dollar. That's firmness in euro against the dollar, and it's bottoming out in the pound against the dollar as well. Although we've got interest rates in the United Kingdom next week, and I've talked about that in the analysis. So subscribe on the emails as well on the website, because you want to read the analysis for that one for Thursday next week. So that's if we get a low number. If we get a high number, then that is essentially what we would consider to be hawkish. That's holding rates for longer. I don't think they're going to increase interest rates at this stage. We're not in that kind of a narrative, but it's about a question of when you're going to cut, or if you're going to cut, or if you're going to cut much further down the line. So that hawkishness is about holding rates at their current levels, and that of course will be stocks down, dollar up, and that is what we've got baked into the cake right now. So with just a couple of minutes to go, it's time to start getting ready. Now what I'll do, let's get over to the charts. You can see this is the S&P 500 here in front of you. I'm just going to get my tools in a row. So we've got everything lined up and ready to go. You can see this is from Wednesday, when Waller and Bowman were voting against. They were on the side of Trump, basically, and looking at some point in the future. So that should now, if we are now going to, this is the top for the year. This could potentially be a top for the year. If it is, then I would want to stay under that level of 6,369. And if you think we can't get up there now, think again. These markets, they move quick, as has been evident over the last 12 hours. So yeah, my focus is very much on the stock market. The only thing I would just say as well is that I think the leader here is actually the Dow. If we're going to enter bear market territory, because if you look at the Dow on a daily, you'll see all-time highs getting there on that. We're struggling on the Dow to get up, but we're just going to enter the next 20 seconds. So here we go. Sharpen your pencils and good luck. 110k expected, 10 seconds to go. 73, it's low. 4.2 on the unemployment. 133k on the revision as well. That's quite a big number. Let's check I've got that. I've read that right or heard that right. That would essentially be dovish if it was, and that would be a push, a lean on the market, on the economic system to cut interest rates. If that were to happen, this could be bottoming behavior here in the stock market, essentially, which meaning that any hawkishness is now potentially priced in. So any of that dovishness will basically be stocks up, dollar down. So that should be supportive now of things like, let's just bring up the euro dollar, check on that. There you go. So you can see it there. So that is the right dovish reaction. So delayed reaction may be in the indices and the equity markets, but we'll see what happens when the US markets open as well. But you've got a nice dovish reaction there. I like that on the currencies. That's really nice and clean looking. We should be down on against the Canadian dollar, which is true. That could be a nice retrace there on that move there. These are just 1 hour time frames. Euro against the pound as well. I put in this in the analysis yesterday. It's worked perfectly, that 38.2. You'll see that in the emails. Absolutely fantastic. So that's the dovish reaction. So this could be pressure now on the dollar to fall even further. Now, I thought we'd have a little bit further on the dollar index to go. If you'll see from the analysis we talked about last week, that divergence is beautiful there. This is the daily on the dollar index. So I'd be looking for higher here, but initially off that reaction, that seems to be the right kind of reaction. I'd be looking for equity markets to kind of hold together over the course of the next 8 hours. If that does happen, we know that our dovish, hawkish narrative is playing out absolutely perfectly. Yeah, so yeah, 73. Goodness me. I wonder who got that. I wonder who got that in the giveaway. Fantastic stuff. Who said markets are boring? Super, super cool. Really, really good market reaction. Let's bring up that S&P 500. Yeah, I mean, if that's the top of the market that we've seen over the last 24 hours. But this is the thing, isn't it? These markets, they drop down. And like I said, that's the sort of move overnight that Americans wake up, they get to the desk, they get to the trading desk, and they start to worry a little bit. That you don't just come out and say, like, let's buy the market on a move like that down overnight. I know we printed an all-time high, but it's vicious. It's vicious. So it makes people think twice before they actually enter into it. Yeah, fantastic non-farm payrolls. Really, really good to see. Low number. Dovish as hell, that's for sure. Right, okay, we've got, so good luck in the competition. Whoever got the number, congratulations. We'll get that counted and sorted over the course of the weekend and get the winners announced at some point early next week as well. So that's 3 two-step accounts coming very, very soon to you. Right, okay, so we've got a fantastic weekend giveaway, or weekend offer on the website. These are always worth taking advantage of while they're here. I say every single week in the live stream because they do change and they do go. This is a particularly good one for the course of this weekend to take you into your trading next week. I think there's going to be opportunities next week as well. So get on the website and grab yourself a 30% discount off all of the accounts. That's the 1-step, the 2-step, and then also the instant funding as well. And then if you do select the instant, you get increased drawdown on your first level, which is very, very, very good to have. They're very popular, the instant funding accounts. If you decide to go for the challenge accounts, then you can have the faster weekly payouts added in to the mix as well. So we went through the 2-step before. It's a cool account, and right now you can get 30% off on the website. Summer 30 is the code that you are going to want to use on the checkout. Plus as well, if you're still with us, then don't forget that we've got the futures coming up very, very soon at FTUK. We've been really looking forward to this. It is literally weeks away now. We've got some cool new accounts if you're interested in trading across the data and the information from the futures exchanges with us at FTUK. I've got a feeling that we'll do it particularly well because we do tend to do these things quite well. And I come from a futures background as well, so I cannot wait to get the platform all sorted. And yeah, FTUK futures. It is coming around the corner very quickly, but my goodness me. There we go. All done for another month. Non-farm payrolls, 73k. Very dovish number. Thank you very much for joining us and watching. Hope you managed to navigate your course throughout the week. I know it has been difficult, but there's plenty more opportunities over the course of the next week or so. Thank you very much for your company, and we'll see you all next Friday.